Imagine waking up tomorrow and your stocks have crashed 20% overnight. Gas prices have doubled, and the news says the US just launched airstrikes on Iran. This isn't a movie. This is exactly what could happen. And today, I'm going to show you exactly what it means for your money. Iran sits right here on the edge of the Persian Gulf, controlling one of the most critical oil routes on Earth, the Strait of Hormuz. 20% of the world's oil passes through this narrow waterway every single day. If Iran blocks or threatens that strait, everything changes. Within hours of conflicts breaking out, oil prices explode. We're talking a potential jump from $80 a barrel to $150, maybe even $200. Why? Because traders panic. The fear of supply disruption is enough, and oil is the lifeblood of the entire global economy. Here's where it gets personal. When oil goes up, gas goes up. When gas goes up, everything costs more. Groceries, shipping, travel, manufacturing, inflation. And that pain hits regular people hardest, not Wall Street, you. Stock markets don't wait for facts, they react to fear. The second a war is announced, algorithms start selling. Institutional investors hedge, retail investors panic. The Dow Jones could drop 1,500 to 3,000 points in a single day. We saw something similar when tensions spiked in 2020. Here's something Wall Street doesn't want you to think about. War has winners. Defense companies like Lockheed Martin and Raytheon see their stocks surge. Energy companies profit massively from high oil prices. If you're invested in these sectors, war might actually make you money. But for most investors, it's brutal. Airlines crash because oil costs skyrocket and travel demand collapses. Tech stocks drop as supply chains, many reliant on Middle Eastern infrastructure, get disrupted. Consumer spending tanks. Retail gets hammered. Emerging markets, devastated. When fear spikes, investors run to safe havens. Gold shoots up, sometimes 10 to 20% in days. The US dollar strengthens as global investors flood into American assets. If you hold gold or treasury bonds, you're smiling. Everyone else is white-knuckling it. Iran doesn't just control oil, it sits on key shipping lanes connecting Asia to Europe. A war could shut down or reroute massive amounts of global trade. Think about every product that travels by ship. Electronics, clothing, medicine, food. All of it gets slower and more expensive. Remember inflation from 2021-2023? Multiply that by 3. When oil prices double and supply chains break, the price of everything goes up, and the Federal Reserve is stuck. Raise rates to fight inflation and you crush the economy. Don't raise rates and inflation spirals. There's no good option. This already happened, partially. In January 2020, the US killed Iranian General Qasem Soleimani. Oil spiked 4% overnight. The Dow dropped 233 points the next day. Iran fired missiles at U.S. bases in Iraq. Markets freaked and then it de-escalated. But what if it hadn't? Let me walk you through what the first 72 hours of a U.S.-Iran war might look like for financial markets. Hour 1, news breaks. Futures markets crash. Hour 6, oil hits $120. Hour 24, markets open, circuit breakers trigger. Hour 48, emergency Fed meeting. Hour 72, G7 nations convene. The Federal Reserve will face an impossible decision, and fast. Do they cut interest rates to stimulate a crashing economy and risk fueling inflation? Or do they hold or raise rates to fight inflation and risk triggering a recession? History shows they almost always get this wrong in war scenarios. Short conflict, 2 to 4 weeks. Markets probably recover within 6 months. Oil normalizes. Prolonged conflict, 6 months to years. We're looking at a fundamental restructuring of global energy markets, trade routes, and potentially the global reserve currency system itself. Bitcoin. Everyone always asks, will crypto go up during war? The honest answer, it's unpredictable. In the initial panic, crypto usually sells off with everything else, but if the conflict triggers sanctions, currency collapses, or banking disruptions in Iran or the region, Bitcoin becomes an escape route. It's a wild card. Here's what smart investors do before a conflict escalates. 1. Hold some gold or gold ETFs. 2. Look at energy sector exposure. 3. Reduce airline, travel, and retail exposure. 4. Keep cash liquid. 5. Don't panic sell everything. Wars often create buying opportunities in the dip. This isn't just an American or Middle Eastern problem. Japan imports 90% of its oil. Germany, South Korea, India, all heavily dependent on Persian Gulf energy. A US-Iran war would hit every major economy simultaneously, triggering a global synchronized recession faster than COVID did. Here's the cold truth. A US-Iran war would be one of the most financially destructive events in modern history. Oil shock, market crash, inflation surge, global recession. But within every crisis is an opportunity, if you're prepared. The question isn't whether you should care, it's whether you'll be ready. Start preparing your portfolio now before the headlines do it for you.